Hello, this is Philip at the Laptop Trader channel on YouTube. Welcome back to our community. This is a more beginner, novice level trading and investing channel, but I'm here to share my experience, give back to the stock investing and trading community, one video at a time. Okay, so we'll cover some basic concepts like market cycles, technical analysis, different types of management, and how to create confidence by putting the odds in your favor. So good luck. My email contact, laptoptraderphil@gmail.com. Caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed in this video is trading or investing advice. This channel is for informational purposes only. Please seek qualified help if you need help investing. Remember to invest in yourself. Start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself and then invest in the markets, which is exactly what I've done over the past several years. So, for me, I'm more of a curious personality. I like to tinker around, diagnose stuff, see how things work. So this has been a pretty cool journey for me to see and diagnose, what makes the market work? How does the market work? What are the market mechanics? Who are the major players in the markets and stuff like that? So it's really helped me out. So let's just get to some charts. This is going to be a little more of a free flowing video this month. I don't have a solid agenda, but I just want to go over some different things right now that I am seeing in the markets. And so let's go over that right now. Let's go here first to a monthly chart of our major markets. This is the S&P 500 chart, the ETF SPY. Okay, so we can see from this was a high point around 613, and then we had a low point here in April of about 481. So that represented, I think it was about a 21% drop. So that's a fairly significant drop in that time period. Then in April and into May, now we've had about a 15 to 16%, maybe 14% to 15% rebound in the market. Okay, so this has been a pretty strong rally over the last, 3 to 4 weeks. But we also have to look at this in context, which is why I pulled up a monthly chart for you guys, because this is a rally in a fairly volatile market. Okay. So with that being said, let's look here at a weekly chart of the S&P 500. And it's a little more pronounced on the weekly chart versus the monthly chart, but you can see here was the high point. We had week after week of selling, and then that selling kind of, I guess, came to a climax with this volume spike in the first week of April, which was, in technical terms, this was a gap down, made a new low, and a reversal to the upside candle. So that's a gap down reversal candle on heavy volume, way above average volume. So many times that will signify, not guarantee, at least a near-term low in the market. And that so far has been the case for the last 4 weeks. So we made a strong move down, now I've made a strong move up. So this is just a context of a rally in a down market. Okay, that's just where we're at. Now this week was kind of like an inside week. Not much really happened this week. Volatility has come down. The news media has settled down over economic issues. I'm not going to make any political statements or political comments. I just want to talk about facts. I don't want to enter politics in this discussion. But basically, a lot of this volatility was related to the topic of things like economy, tariffs from this current administration. And so sometimes when a new administration or new policies take effect, many times there's just simply uncertainty about those new policies, and then fear. So fear will enter these markets. So I want to go to that chart next. I'm going to go to just a quick look at these ETFs. So we could take a look at stuff like the VIX. We could just take a quick look here at something like Bitcoin, which has really had a nice rally here over the last month. Let's go to a week. I think a weekly chart will show that better. So yeah, here's the the VIX the Bitcoin kind of sold off, and that was made a nice rally back towards these highs. Close the week at over 104,000 on Bitcoin. Whereas the SPY or the spiders have made a nice rally in the context of a market that has sold off. Basically the same story with the NASDAQ ETF or the NASDAQ index and the other major market ETFs that I follow. Very similar story, where we've had a rally off of a near-term bottom to some degree. So nice strong rally April and into May. Similar story with the industrial stocks, not as strong as the SPY or the Qs. And the transports also have had a rally in a downtrend. Now, as uncertainty came into the market, just like it did back here in 2024, that big spike in volatility, and then things calmed down. Okay, and then we had this year, we had fairly low volatility, January into March, and then we had this big spike in volatility, which is a proxy for fear, or the fear of the unknown, fear of uncertainty. And now things have calmed down. So this fact that fear has subsided has allowed other market participants to analyze different facts, considered what new policies are going to do to markets and to the economy, and now things are calming down. That's basically what's happened. Okay, not what I want to happen, or not what I think should happen, but it is what's happened. And we can see the same picture in mid-cap stocks. We can see the same picture in small-cap stocks. This rally over the last 3 to 4 weeks is based on the fact that fear has subsided. Now people are willing to take more risk than they were a month ago or 2 months ago. Okay, that's what's going on. So let's just take a look at I think it's 11 main sectors. Let's take a look at energy. Energy has not had the rally of the general markets. It's more of a sideways movement after a big sell-off in energy. So energy is just kind of hanging out towards the lows, not hanging out towards the highs. So energy does not look very good right now. Financial stocks have made a nice rally along with the market. Consumer discretionary has had a little bit of a rally. And in this market, not as strong as the overall market, but a rally nonetheless. Healthcare has been a real big disappointment, and I thought this sector would do better. It just simply hasn't. Since last September, it's just been in this downtrend. It looked good here at the beginning of the year, and then it's fallen off a cliff. So healthcare stocks right now are just not doing good, and the healthcare sector in general is probably the weakest sector. Biotechs have pulled down this sector, and so has the overall performance of that sector. And large companies like United Healthcare have been sold off significantly also. So I would stay away from that sector for the time being, other than maybe a few select stocks, maybe like Cardinal Health has been okay. Technology sector has basically followed the market, or even led the market down, and then led this rally up. Utilities have been in a sideways trend for quite a long time. Industrial sector has performed similar to the overall market. The materials sector has still in a downtrend, a significant downtrend. It has rallied along with the market, but we're still, again, it's just a rally in a downtrend. Again, many times you'll see these wide range bars with on volume. Many times that will signify that, okay, people are starting to take more risks. So this is looked at as a buying opportunity when markets sell off. It's like a big sale. That's a good way to look at it. Communication sector didn't sell off as hard as the overall market, but it also hasn't rallied as strongly as the other parts of the market. It has rallied, so it's just kind of following the market right now. Consumer staples has been I think in my opinion, another disappointment. We have not made a new high in staples since, since September of 24. You would think this would have done better with all the fear and uncertainty, but it simply has not. Finally, real estate sector is still in rally in the context of an overall downtrend. So that is where we're at. Interest rates haven't done much. Interest rates are still at the 4.37 area, which is lower than this recent high of 4.79. So interest rates have come down just a little bit. So not much to report there. What else can I show you? I think that's a good enough view of the markets for this time. There's three areas I would avoid right now. Healthcare, up to and including these biotech stocks, which have been sold off significantly. As the market has rallied, biotechs have not. Let's see. The cannabis sector is still in a long-term downtrend, so that has not really rallied. And stuff like oil and oil services have also not rallied really at all. So those are three areas I would watch out for, not get exposed to at this time unless you know something or you have more information. Areas that have done fairly well recently have been software. These not transportation, but electric stocks, electric mobility stocks, including Uber, things like Tesla. Let's take a look at solar stocks that haven't done much recently. How about travel stocks? Travel stocks have had a nice rally off the bottom too. So that's about it for now for our general market overview. Let's get to something else. So in this context of this rally within an overall market sell-off, let's take a look at our former market leaders, or what I call our Super 8 stocks. Now we're just going to look at some daily charts. And so we can see within the context, Microsoft on this daily chart was in a downtrend, right? See the long-term red line, down, down, down. Then we had a range expansion bar. We had a retest of that area and a nice rally off of this near-term bottom. We also had an earnings event recently at the end of April. And from that earnings event, we had a nice gap up, and we've maintained that level for the last, 7 or 8 days. So Microsoft has been very, very strong, and maybe even leading the rally, okay? Amazon is more of a bottoming pattern, where we've got this near-term bottom, kind of moved up, moved back down, tested that area, made a higher low, moved up, higher low, moved up, and now another higher low. So this is creating a pattern of what's called price contraction or volatility contraction, where we had a larger range. Now that range is squeezed in, and right now this looks like possibly a nice buying opportunity in Amazon. However, it'd be a buying opportunity in an overall downtrend. Google has not fared so well. Well, these other two stocks have rallied. Google tried to rally, had an earnings event, and then sold off this week. So Google is showing some relative weakness at this time. NVIDIA, also a very similar pattern to Amazon, where we made this low, and now prices contracted into this area. Again, this could be a buying opportunity in a downtrend. It looks like maybe NVIDIA will have earnings reporting soon. I don't know that date, but this could go either way, okay, for NVIDIA. But certainly hasn't rallied like Microsoft has. Meta has had an earnings event, a gap up, and has maintained this new level. So I like the look of that as far as Meta goes going forward. Netflix has been clearly the leader out of the Mag 7 stocks. Again, this was never really in a downtrend, more of a big fat sideways trend, made a low, and has rallied significantly off the low, had an earnings event, and continued to be bought up. So Netflix, again, is kind of leading the market right now, leading this higher. Tesla, still in a more of a bottoming pattern, not really doing much, not leading or just kind of following right now. So Tesla is in a neutral area, in my opinion. And Apple is showing some relative weakness, right? We had an earnings event back here, sold off along with the market, had this, big sell-off, came back, had an earnings event, and since earnings has sold off. So Apple showing some relative weakness, whereas Bitcoin showing some relative strength. So you could see that I think what's going on right now with the market context and these top 7-8 stocks is I think Wall Street right now is kind of rebalancing, trying to figure out which stocks they want to hold, which stocks they want to add to their positions to, and which stocks they want to reduce their positions in. It's pretty clear to me right now that Wall Street overall likes Bitcoin, Netflix, and Microsoft, Amazon to a degree, and Meta and Netflix. Whereas they've chosen to not necessarily just like totally get away from the other stocks, but they've clearly sold Google and Apple, right? And NVIDIA also to some degree. So I think what's happening right now with some of the uncertainty about policies and economy is Wall Street right now is kind of rebalancing their portfolios, which is something you should also look at doing if you have a portfolio. Are you overweighted in any one stock? And I'll share a story with you about Apple. And I was listening to some financial podcast or something a while back, and they had callers call in or write in. And somebody had said that, they had a large position in Apple. And, the host asked the caller, well, what type of position do you have? And he said, well, I have this much money in Apple. I bought Apple, whatever it was, 15, 20 years ago. I've had all this appreciation in Apple. It's one of the few stocks I own. And my other investments are just in like mutual funds and real estate. And he asked the caller, well, what is your position? What percentage of your assets are in Apple? And I think the caller said something around 95% of his net worth and his assets were in one stock in Apple. And, the advice to the caller was simply, well, you should probably reduce your risk and reduce your exposure to Apple and reduce your exposure to any one stock like that, And so he recommended selling off Apple and maybe just holding, instead of 95% of your assets in Apple, maybe just own 5 or 10%. And so I thought that was pretty prudent advice because they had experienced such gains from Apple stock that it kind of overtook their portfolio. And I think that is exactly what has happened to Wall Street over the last couple of years, where they've had these gains in Microsoft and Amazon, right, and Google and even NVIDIA especially. And I think Wall Street right now has taken this opportunity to reassess where they're at with their holdings. So I think that's kind of what we're seeing happen right now in the market. They're trying to pick winners, hold on to those winners, but at the same time reduce their positions, take profits, and reduce their risks in an uncertain environment. Okay. Now let's talk about some other positives about this market. Let's talk about, yeah, this is the right list. So this is just kind of my market leaders list. This is not all inclusive or any, it's just something I put together that says these are companies that I look at as market leaders or market winners. So on these daily charts, we can see that NVIDIA is still in this downtrend on the daily chart. And Meta kind of has came, I wouldn't say it's necessarily out of a downtrend yet, but it's clear it had some improvement, right? Something like Honeywell, which is a more established company, has had a nice move up recently after an earnings report, but it was still on a downtrend for a long time. So we're starting to see some improvements in these individual stocks. TJ Maxx has shown some relative strength. It's closed above all of the key moving averages. So TJX companies looks like a little bit of relative strength at the time, for the time being. ADM is in a long-term downtrend. It looks like it's transitioned into this sideways trend over the last 3 months. Corteva, similar, but has had an earnings report and has had, looks like, a good reaction to that earnings report. So I like that when companies have good reactions to earnings reports. That shows like there's more belief in that company. Remember, earnings report is like a report card, reports on the past, and then the analysts will take that information and try to speculate forward. CF Industries, another agriculture company, has had a nice move up off of a bottom. Had kind of a, I don't know, I guess a neutral reaction to earnings. One of the recent winners has been companies like Dollar General and Dollar Tree, who've been in this short-term uptrend. And here's Amazon daily chart in this overall downtrend, but improving. Oracle, which was a market leader for a long time, has been in a downtrend, but improving recently. Netflix, probably holding this market up more than any other single stock. Just had a huge run recently. Tesla kind of trading sideways and improving. ABT, which I believe is healthcare, it's been in a long-term here sideways trend since the last earnings report. Recent earnings, it looks like we gapped up into earnings and have held this level for about 3 weeks, so that looks positive for Abbott Laboratories. Again, I look at things like earnings gaps up as positive in general, and something that gaps down on earnings, at least if you're looking to buy a stock, is negative. Here would be an example of a negative, right? UPS gapped down on earnings and then went into sell-off. Recently had earnings and it just kind of went sideways, so not much to report there. Intuit, right? Gap up on earnings, then had this sell-off from overall market weakness, had a low, higher low, and now we've recently made another higher pivot low and made a new high on Thursday. So this is a stock that's beginning to trend up. Symbol INTU for Intuit. Signet Jewelers, for whatever reason, was in this long-term downtrend, has recently improved, right? Gap up on earnings, sideways, improving. Apple, not improving, similar to UPS. It just hasn't had that same enthusiasm for Apple. Nike, long-term downtrend. CVS, large pharmacy company, looked pretty good after this last earnings report, and since then it just went sideways. Recently we had a gap up on earnings, but then sold off quickly back to this level. So that remains to be seen if that's going to perform or not. McCormick & Company looked good for a minute and then sold off. Hershey, still in a long-term I would say a transitionary period from a downtrend to the sideways trend. Clearly improving over the last couple months. CarMax, still on a downtrend. Gambling stock, Las Vegas, downtrend overall, but slight improvement over last month. PACCAR, large equipment maker, downtrend. This has been a real winner over the last 3 to 6 months. Republic Services, a waste company. Pretty steady uptrend there. Nice trend on Republic Service. Spotify, another real winner over the last year, but recently in just a sideways trend. Texas Instruments, kind of a large company that deals with microchips, overall downtrend. Credit card companies like Visa, pretty much a sideways trend. Communications companies like Verizon, sideways trend. Transportation companies, more of a downtrend. XPO. This is more of industrial stock. Johnson Controls, recently nice move off that bottom. Looks like a positive reaction to earnings, so that looks good going forward. How about banks? Something like, not banks, but Boeing Company. Nice reaction to the last earnings report there. So that looks positive for Boeing. Blackstone, a financial company in an overall downtrend, but improving. So this is just how I look at stocks, right? So now we're looking for opportunities. Capital One has had a nice move off the bottom. Good reaction here to earnings, right? Gap up and went sideways after earnings. So that looks more positive. Etsy, kind of online retail company, more of a downtrend. So we're just looking to sort and segregate what looks good and what doesn't. And if you go through, in your spare time, maybe 100, 200, 300 stocks, and you'll get a feel for what's performing at the time and what isn't, okay? So that's just what we're looking to do, and then we can sort out some of the better opportunities from some of the not so good opportunities. And then you can take other information, such as earnings information, financial information, fundamental information, or even quantitative information, and you can apply that to your plan and the way that you would invest. Okay. This chart looks very positive to me, right? Long-term downtrend. Retested this low several times, wide range bar up, and now sideways. So this looks more positive for this company. It looks like this could make like it's getting ready to make the next move up. But we always have to be cautious around earnings too. So Fiverr here, this is one that I like fundamentally, but technically it has not performed. So we had this low back in April, and then since then has had a nice move up along with the market, and it looks like a positive reaction recently to earnings. So I like that. To me, this would be a potential opportunity for me to get involved and see if Fiverr could make the next move. Just thinking out loud. I'm not recommending you guys take any trades I'd take, but let's see if I can find something better than that. So now I'm just going to move a little bit quicker. I like this, where it was in this long-term downtrend, which creates a buying opportunity down here. Right, we make a low, we retest this low, and then buyers step in and gapped up on earnings, and since that time, over the last couple weeks, price is just held in this area. So this would create for me, based on Friday's close, an opportunity to get involved in this stock. Just talking technically now, where I could get involved in this company based on this nice close, this tight close on Friday. We have a high of 94.01 and a low of 93.06. Based on those numbers, I could have about $1 stop loss, and let's say I want to increase that just so I don't get stopped out quickly. Maybe have a $1.50 stop loss on a $93.46 stock, which is about less than 2%. I could take less than 2% risk and take a an educated risk, a calculated risk that this is going to continue to move up after this earnings information came out, okay? With a fairly low risk entry, with a fairly high probability of this stock moving up. So you're just using that information, this could present an opportunity based on my trading plan. And then if it doesn't move up, of course I have a stop loss in place. And if it does move up, then I could raise my stop and try to protect my profits. Versus this, for me and my trading plan, this chart presents absolutely no opportunity because not only is it in a long-term downtrend, but it had a horrible reaction to earnings. And it looks like this stock, Energizer Holdings, is probably going to continue to sell off. So I don't really trade short, so this is obviously a no-go for me. AMD, similar sentiment on that. Looks just like a rally in a overall downtrend. Walmart has had a nice bounce off the bottom, but we'll see what happens with that. AT&T didn't really have much of a reaction at all to this recent earnings report and went sideways for 2 weeks. So could this present an opportunity? Yeah, it could, but I don't think it's as strong as Pentair. We don't have any indication of direction on this stock. It could go up or down. One day it could gap up, one day it could gap down. We just don't know yet. So we need a little more information on AT&T to take a chance on that one. And then here's one of the leaders in healthcare that has sold off in a pretty strong way recently. And again, just symptomatic of the healthcare industry at this time. One stock I am involved in, I'll share with you, is Chewy. I bought Chewy after, we had earnings, so I didn't buy it there. We had this low, we had a gap up, closed, then we had the next day we had this large wide range bar, an inside bar. I believe I got involved right in here. On these tighter candles is where I got involved. And so I've been able to see a profit in Chewy here over this last month. I can tell you what it was because I had a really nice entry on Chewy. So in this month we had a move up of about 15% plus 5. I probably have about somewhere around a 10 or 12% gain in Chewy at this time. And you can see this is long-term market cycle dynamics here with Chewy. And stage analysis, right? We had stage, 2, then with this top, we had stage 3, and then stage 4, and then we've been in stage 1 forever. And now Chewy's had just this kind of slow and steady move up off the bottom. It's not trading above all the moving averages. So to me, Chewy looks like, for the time being, a slow, steady performer this year, even from last year. And it looks like Chewy's making its way back up towards $50 or higher. So that's why I'm in Chewy at this time. So we're just trying to look for opportunities. Now this stock is the opposite of the healthcare industry in the fact that this has continued to perform regardless of the market and regardless of the healthcare industry, which is McKesson Corp. And this can be confusing to investors because you can have this happen with a stock like McKesson because it's such a strong company and because investors like it so much. It trades at closed Friday at $693.46. So many times that confuses investors that, man, why is healthcare down so much, but McKesson trades at this high dollar and it just doesn't seem to sell off. I don't get it. When am I going to get my buying opportunity in McKesson? Well, you may not, because McKesson has just been so strong. And so that's just one that's probably part of a portfolio. If you own a mutual fund, it's probably in that mutual fund. So this is, for me, this wouldn't be as much of an opportunity because, one, it's a more expensive stock, which I'm not that comfortable with. And two, it's just in this long uptrend. It's probably already part of my mutual fund anyway. So it's really I just keep it in here to watch it, and so that I remain educated, right? Versus something like PayPal, which is still in this long-term sideways stage 1. So PayPal, to me, for my trading plan, could present an opportunity if we get, more of a move off this bottom. We just haven't had it yet in PayPal. I've been waiting forever. It's just not moving. And again, this is sold off along with the market. Now it's kind of bounced along with the market. So, PayPal is just in that long-term stage 1 watch and see area. So we're still waiting for our opportunity. So you have to kind of pick and choose what you're going to invest in or what you're going to trade in. If you're a long-term investor, then, right now, the S&P 500 has just offered you this great buying opportunity, at least in the near term, right? So when markets are down 21%, and if you stay the course with your investments, whether it's through work or through your personal investing or through a financial advisor, if you were dollar cost averaging or put money away every week or every month, this has turned out to be the market on sale, okay? And so has the NASDAQ index. This is turning out to be a possible market on sale buying opportunity. So it just depends on where you're at, what your investing style is. I can share with you other trades I've taken recently that have been pretty good trades. Here's Cardinal Health. Again, even though Cardinal Health is part of the healthcare industry, it has outperformed its peers over the same period. It's actually outperformed the market too. So this is another very strong healthcare stock that I was involved in back here in the 120, 122 area. Okay. So because I had such a nice relative cost basis, I've now been able to profit off of Cardinal Healthcare, even though the healthcare industry has been kind of beaten up. This is one that stopped me out. REFI, which stands for Chicago Atlantic Real Estate Finance. Okay, this stock just kind of tread water, and then it kind of gapped down, stopped me out. And this is related to the cannabis sector. It's actually a real estate trust, a real estate company that invests in cannabis properties. And so it just hasn't done that well at all. Versus Uber. I have a position in Uber, and Uber right now is showing a profit for me because I had a nice cost. What is my cost in Uber? It's somewhere in this area right here. So I have a cost basis of around $72 in Uber. So close Friday at 82. So because my cost basis is lower than where it closed, I understand my position. AT&T has had a nice solid uptrend over the last 2 years, right? Solid stock. In fact, right now, it looks like over the last 4 weeks, AT&T is just consolidating in an uptrend, which could offer a potential buying opportunity right now. Right? You get a nice low risk to reward of between the high and the low, of less than $1.50, if you were to use the stop loss. Again, watch, if you're going to buy a single stock, also watch your position size. So I know what my position size is for my plan, and you should know your position size too, your max position size. This is another stock I'm involved in. Curiosity Stream. It's just a streaming service. It's not nearly as comprehensive as something like Netflix or Hulu or Tubi, but it offers kind of a unique platform for people that are interested in that content. And, right in here, I bought this stock after this, it gave me this buy setup right in here. Right, so now I'm up I don't know, whatever is 40 or 50%, you know, in a low cost stock, which was a low cost opportunity, which provided me with a great entry point. Okay. What else? I was also involved in gold, not gold specifically, but this gold miners ETF. Gold miners recently have profited or had a nice run after gold prices have spiked, so I got involved in that at an opportune time. So we're looking for opportunities. Here's another possible opportunity. Celsius Company, previously had this nice run up, gave us the stage 3, into the stage 4 downtrend, and since late last year, it's just been the stage 1 sideways trend. Then we have this spike on earnings. Since that event, the stock has slowly moved up, and so now it may be presenting a possible buying opportunity. And what if this could just, let's say it doesn't go back up to its highs, but what if it went from here to 50 or 60 per share? That would be a great trade. So again, we're looking for context, buying opportunities, using different time frames, and just trying to get, use our capital in an efficient way. Here's one I got involved in recently. Even though this was in this big downtrend, we had this spike in volume. Right? There's almost no volume on the stock until recently. So what does that tell us? That tells us that possibly that institutional buyers are starting to look at, in the short term, this could be a buying opportunity. And so I just took a small position in the stock at around the $2 area. And Friday it closed at $3.91. So because I don't want to get overexposed to something with this low of an interest, I just took a small position. I think I've got 200 shares maybe. And I don't want to get overexposed to something like this because it's been in this long-term downtrend. 2, it has negative earnings. 3, it would be considered like a penny stock. And so 4, it just doesn't have the liquidity to go all in, so to speak. So I just take a small position. I see this volume spike. I'm like, okay, that looks good. And then I just go from maybe a weekly or monthly chart, and I go down to a daily chart. And I say, okay, where could I get involved that would be relatively safe? So I just got involved here during this consolidation, right after it kind of started to move up. Right here, probably in this gap up, one of these 2 days I got involved. And so it just kind of moved up from there. And so if it continues to move up, I'll profit. If it doesn't, then I'll put my stop in this area, and then it won't hurt me because I'm not exposed to Hydrofarm Holdings in any major sort of way. Like the gentleman who called in and said I'm exposed to Apple. 95% of my net worth is in Apple. And I don't have that exposure to this. I have maybe a 0.00001 exposure to Hydrofarm. Yet I'm still showing a nice profit in Hydrofarm. So you can take positions in any way that you choose, but you have to do it with some sort of common sense. I really don't have much else to share with you guys. I hope that gives you some market context. I hope that helps you out as far as how I look at the market, why I think things are happening the way they are. Again, if you have any questions, you're welcome to contact me either through email. If you know me, you can, of course, contact me through text. But my email for questions is laptoptraderphil@gmail.com. Again, I wish all the mothers out there happy Mother's Day, and I hope you guys have a happy summer. We will see you in June. Good luck to you. Goodbye.